Ladies and gentlemen of the crypto space, we're live on a Monday, December 30th at 12:21 p.m. We are just before the new year, and it is mandatory of me to get out some content. I am recovering, so I'm a throat thing, so I will do my best. But content is content, and there's a shift going on, as we could clearly see by the red. Clearly, there's isolated outliers, especially in meme coins, tends to be very short-lived, rolling tops, capitalization, and the best inspection to see that really is where the hell is the dollar? Where the hell is the bond market? And we've seen some volatility in interest rates. Um, and these are things to be knowledgeable of, respectful of, responsive to, and how you make your decisions and what to do versus what not to do. And this dollar is screaming. It's screaming very loudly. When the dollar goes up, everything falls apart really quickly. So at this level, let's zoom out really quick. This was our spike back in 22. This is when everything fell apart. This clearly crypto has a capacity to fall apart because of the nature of the investors and just ease of access. So we're able to liquidate to have available capital. And this is from a global perspective. So it rolls over very quickly. I would argue that the dollar very quickly affects crypto even more so than stock markets and equity indices. So when this goes up, given that we focus on crypto markets, this is something to be respectful of. Not that we were in buying mode before the dollar ripped higher over the last 2 weeks, 3 weeks, month. Um, so we're not really changing our method of engaging with the markets, but this has the potential to roll things over. Now, we're above a critical line. This is a very critical line. This line has a precedence that was set back in 1976. Most of you listening to me were born way after that. So this is a precedence dating back to prior to when we were born. I wasn't born in 1976. That's a critical line. And it's certainly going to warrant policy intervention. Certainly going to has the attention of all the regulators, no doubt. And this has to do with geopolitical stability, the relationship between countries. This has to go down for the incoming administration to meet policy expectations. They set their policy. This has to go down to achieve that policy. It's a very precarious level as well because we are above the level and it's a consolidation. Not only we consolidated above the wick, it was a rejection at this wick, but man, we're consolidating above the wick. It's a relatively short time frame. This is on the daily. It was back in November that we wicked above this relatively critical level, which was set as resistance in October of 2023. So we're talking about a level that was set in 1976 that has shown as resistance time and time again for major blow-offs. This was the 2022 blow-off, was resistance in October of 23, and now we've breached that level. It's quite the precarious situation from a macroeconomic standpoint. Dollar goes up, it drains liquidity from everywhere because the rest of the world is so incredibly susceptible to the price of the dollar because people outside of the US have to buy dollars. They don't earn income in dollars. Eyes on this chart for a spike to the upside. I'm not a trader. We're not a trader. This is where stop losses are critical. You get a spike to the upside, everything's going to roll over. Now you get a spike past 109, it's going to be ugly. It's the way it works. We've highlighted historically from a monthly perspective where the bull markets are. The correlations still stand because of the mechanics of what happens when the dollar is expensive versus when the dollar is cheap. When the dollar is cheap and depreciating, Risk assets appreciate. When the dollar is getting expensive, it tends to collapse risk assets. Move indicator is still relatively elevated, albeit from a moving average standpoint. There is potential for an expression that the regulators are in control. That's always the question. Are the regulators in control or not? Do they have, they ultimately cannot control things instantaneously, but they've set up a tremendous amount of facilities and policies to attempt volatility suppression. How well does that work on a real time basis? It likely doesn't, meaning the potential is always there for a spike in volatility across the board, from the US debt market to the equities markets to the crypto space. Volatility cannot be controlled on a real time basis. The market will market and then policy responds. So there's always a lag, even if that lag has significantly dropped over the last years. So the mere fact that we spiked to 200 is an expression that policy has worked. The facilities have worked to drop volatility down significantly. But the fact that we're at 94, historically high relative to where we were between 2000, I don't know, 2013 to 2020, you didn't really touch this level. Got a couple of spikes in 14 and 15, but they were very wicky from a monthly standpoint. Everything after that was below, significantly below that level until ex- experienced what we experienced in 2020. So between these, of all macroeconomic indicators, these are the two pieces of data that give you the highest level perspective on whether shit is okay or it potentially gets significantly volatile really quickly. Spike in the move, spike in the DXY, and shit is gonna roll over. Generally speaking, what we want to see is US long-term treasuries get bid, come down in value, which in the short term could historically was risk off in equities. You start to see a bid in treasuries and people are rotating, and it's an expression of capital rotating from relative underperformance in equities to the bond market. Now, it's always it's always different this time. There's always similarities. I don't I don't still I remain consistent with my thought that I suspect it's quite different in many regards. I don't expect risk costs to play out the same way as it has historically played out. You have so many folks talking about a very significant change in the behavior of 60/40 portfolios. So what does that really mean? The structure of the system is changing. And what does that mean? That means what is normal is changing. You just notice the bunny ears above my head. So what is normal is changing. Therefore, what is risk off might be changing. Clearly, the debt composition is changing. Clearly, geopolitical tensions are changing. Gotta be very different. In what ways? That's all speculative territory. What's pertinent is that the entire conversations we had over the last years hold true. Where's the opportunity? Still got dividend investors running around saying Coca-Cola is a good dividend stock. Half a mil buys $1,300 a month. Oh dear. If that's what the general public sees as opportunity, we still are in an interesting position in these crypto markets where most people don't see the real opportunity. They don't see the businesses, the enterprise, the five types of businesses that exist in crypto. They just don't see it. It's not understood, which is why I focus so much on what is money. Because you're not going to be able to engage with these markets unless you really understand that. Otherwise, it's just stupid meme coins and price speculation. And that only lasts for so long. Look at the bleed out on Solana. It's as simple as looking at the numbers. I mean, obviously, you have new meme coins dropping and AI, 16Z is doing pretty interesting. And Zero Bro has got a little bit of a rebound, but look at Farcoin, for instance. Where's Pengu? Pengu minus 6.5%. I don't care about these small ones. Let's look at the negatives. See if any names come up. Pengu, very meaningful there. Bartcoin, that was hot. That was hot. And that is a double top if I ever seen one. Yeah, it comes out of them really quickly. The point is not to be overly critical of meme coins. They surely capture a lot of capital and attention, but they also lose capital and attention equally as quickly. It's something to be very observant of and respectful of. That's a massive depreciation. Buck 30 to 83 cents. Okay. That person's not having a happy holiday that bought at a buck 30. Lots of people bought the top. $831 million at the top was a lot of money that bought these wicks. That is down meaningfully from the top. Food for thought, food for thought. I remain steadfast in my capacity to peer through the bullshit, my capacity to be rational when looking at one of the most irrational markets on the planet, to see the business for what it is, to avoid the price speculation. If discounts emerge, you have to have capital to be able to purchase them. That's probably one of the most important takeaways, especially as dollars at this level and move is at this level. You can't spend all your money. You need capital to make choices. Capital affords optionality. Always respect that. Um, Her back at 91 cents. Let's look at it on the weekly. There's a very nice compression. Be nice to see it stay above this level where it was previously rejected from the 100 SMA on the weekly, about 87 cents, 88 cents, give or take. It'll also mean it's above this level. Means it's above this level as well. This is an interesting level set back in 2020. Very different state of the market. You're right between the 200 and the 100 on the weekly. This is an indication that decisions are being made, choices are being made. And basically, heading into the new year, what a lot of the large actors are considering is how much capital is available and what are going to be the winners. Winners are being chosen right now. Those conversations are being had, and what is going to be monetized versus demonetized. It'll be a very interesting new year, especially heading into what the debt ceiling debacle in January. We're back again with another debt ceiling debacle. Trump was very vocal about that, given that Biden's Congress wasn't able to pass something. They tried to get that into the spending bill, but it didn't pass. They had to remove it. And that's like right now. It's like in 2 weeks. Oh, yet again, yet again. Insanity persists. 92 cents. Very nice to see. Um, Equities have been day over day over day. Was it going on 3, 6 days, something like that, of red? Marginal down. It's not like we have significant volatility and have the VIX up, but down is down. This triggers sentiment, and that sentiment has carries weight, and that triggers more sentiment, and it tends to be recursive. And it's a fact that that's how rolling tops occur, and that's how trends capitulate to the upside and or the downside. That's how trend reversals start to form. Breath. If it doesn't keep going up at 10 to 15% per year, the narrative changes, and now the composition of major capital portfolios change to accommodate the change in structure and change in behavior of the markets from a price standpoint. Anywho, that's my 2 cents heading into the end of the year. Gold 25.50 to 26.50 has been treading water, give or take, for quite some time. 27, 25.50. So, between 27, 25.50, this region. This is what a lot of charts look like with this rolling top, including Bitcoin. Look at that. Albeit, this is why folks experience that. What the hell do I do? Is this one of these? Back in May of 24, resistance. broke down, resistance more or less broke, and it was just this horizontal consolidation for how many months do we experience in 2024? Quite wild. We're so quick to not talk about what the hell we experienced in 2024, but that shit took forever. A good part of the entire year, March of 24 to September, it was just basically nothing. That was extreme volatility though, 73,000 with wicks down to 50. That's a lot of volatility. I certainly look forward to a little bit more clarity in the market. And we're not going to get that right now. We're not going to get that into the new year. I don't think we're going to get that until, let's check back in second half of January, see what they do with the debt ceiling. Let's see how interest rates play out, especially in the treasury market. Let's see how bond market volatility plays out. And even most importantly, how the value of the dollar plays out. I'll try and keep my monologue a little bit short today, not so easy to speak. Let's go through commentary. If you're on X or on YouTube, please feel welcome to comment. I'm more than happy to talk about anything. DCA man in the house. Good morning, Cap. Flamerod, good morning. Tapsy 2024 enjoyers. Yes, we are. It's been a heck of a year. It's been a heck of a couple of years. Good morning, good morning. Connected Dots. Trevor, in your opinion, can the trust be simplified without hem stuff? All distributions out of the trust are income, but the earned property allocated per. Yeah, so there's two primary components of a trust implementation. And from a crypto standpoint, it's just property across the board. In my research, it's quite unambiguous. But you need state statute to support the argument. I saw that there's a decent argument in New Jersey trust code, and Florida just remarkably strong language. So the accumulation of uh, non-monetary entity distributions of property as principal is quite unambiguous. So the accumulation is very straightforward. That language is remarkably clear to the point where I have section 1B of the document at this point. The harder part to argue is health education maintenance and support as administrative obligations. The odds are that's contentious. Now, there's a lot of realities to legal matters. Everything in law is an argument. Now, when you're talking about documentation and or reporting, you're presenting an argument. So it's everyone's choice how to present an argument and how to behave accordingly. Meaning you strip out folding children into administration, which is requires a lot of language. You could clearly just report it as a K1 distribution and file a 1040 for the child, and you'll have applicable income taxes um, for all expenses. So that works, but it's all taxable, which is makes sense from a trust code standpoint. The question is whether that is the easy path, whether it's worth pursuing, the hard path, and what's pertinent is transparency. What's pertinent is full reporting. Now, if you're reporting gross income and you're reporting a deduction for receipts allocated to principal as per entity distributions of non-monetary property, that's pretty unambiguous at this point. But the expenses are deductible under what clause? Certainly not under 212, albeit for 212, property-related expenses make perfect sense. For your improvement, you got to replace pipes because they're 20-year-old pipes, and what's in the pipes? That's health and well-being of the beneficiary. So that's clearly arguable to be in the best interest of the beneficiary, such repairs to a property. So under 212, there's a lot of deductions that are possible if you own a home and you want to improve that home in a tax-efficient way. With regard to food and education, clothing and stuff like that, that's a bit more of a stretch, albeit quite arguable, as suggested in my documentation. Um, what is personal versus what is administrative? It's very arguable that it's personal because they would exist without the trust, but the fact that they have been codified in the trust is a very interesting argument. And looking through case law, there's arguments for and against. So in the end, I always come back to the same conclusion. It's all just an argument. Someone's yelling at someone, but in law, you do it with text and you do it with rationale. You present an argument. So when you're transparent and you do reporting accordingly, that's fine. You can deduct whatever you want as long as there's a substantiating argument. There's consistency in accounting and like 8275 form disclosures where you're stating why you're doing what you're doing. And then that's the responsibility of regulatory authority to respond accordingly. You're presenting an argument, you expect a response. At some point, you're prepared for a response. If you don't get a response, you don't get a response. If you get a response, you have all the documentation. You're prepared to engage with the argument. So, in that regard, one of the most important takeaways from legal matters is don't fear legal matters, engage. It really comes down to becoming accustomed to the concept of an argument. And there's nothing wrong with an argument. So yes, you can simplify and strip out the hemp stuff and all the distributions out of the trust and income, but the earned property allocated. Yes, exactly what you're saying. That simplifies the crap out of stuff. Like literally, you could get rid of. I mean, I would say sections 2.7, 2.8, and 2.9. Albeit 2.7 is still quite interesting. Still quite interesting. And then 2.8 is quite meaningful with regard to Federalist principles. Um, in fact, 2.8 is probably still very pertinent. Um, you know, uh, the 10th Amendment of the Constitution basically says the states get to make whatever rules they want that the federal government does not. So anything that the federal government doesn't cover, states have authority to cover. That's a very strong constitutional amendment. So all of trusts are governed under state law. That's it. Period. That's just what is delegated as an authority, and that is all throughout a lot of documentation, including IRS 03 31619. Is that what it is? Oh, 03 31619, I believe it is. That's a very key takeaway. Um, yeah, 31614 03 31614. Um, make an adjustment that'll be respected for federal tax purposes. Those requirements are a matter of local law. That's very, very unambiguous. So that's just something to be observant of, respectful of, and understanding of. So that's very interesting. Very good point. Very good observation. The wife is concerned. It's a not this page. Not to look at random accounts I look at. Wife is concerned it's a big undertaking to essentially represent oneself in that space. History and legality is already existing. Well, yes, it is. It is very big and a lot of time, very time consuming. I mean, look at the length of the document. It's 85 pages at this point. Research history and legality already existing. Well, that the beauty of it is already existing means you have all this documentation, which is what I've pulled together in document form to present the strongest argument possible. Um, the process for regulatory authority contesting uh, reporting is relatively straightforward. They basically ask you, how do you substantiate this? And first and foremost, your strongest asset is your document. So that is imperative to have in the strongest shape possible to present the strongest argument possible. Base trust instrument, as well as the operating procedures as I've crafted. It is a monumental undertaking, unfortunately, which is what general public gets so angry about. How wealthy folks, and not even myself at all, could just they have attorneys that not only craft strong legal documents, but just represent. And it's like, all right, go to the attorney, talk to the attorney, and that's not fair. So the big undertaking is because we I chose to do it myself, and because I can't afford millions of dollars in legal fees. Um, so that's an interesting concern, and that is something to always be concerned about. So over the years, I've been decreasingly concerned, and it's been a couple of years working on this stuff. Years, easy, right? I've become decreasingly concerned and have found much more comfort in the realizations of late uh, that you present argue. I have no interest in just sitting back and being like everyone else. I have all interest in doing what most people don't do, which is results in the entire portfolio composition, which results in the documentation and business structure. Um, should be concerned, and it is a massive undertaking. Very good points, though. Sir Joe, President accounted for. Patty, from Luke Groman's recent interview, they must devalue the dollar. Luke has quite contentious in some of his arguments, but I think he's quite calculated and steadfast in his response. He has great pause, so he has great deliberation in how he responds to people's questions. I've seen his most recent interviews, and they either devalue the dollar, that's it, or one at 108, shit falls apart. Um, I mean, everything fell apart in 22. Everything. Governments fail if the dollar's too strong. Currencies collapse. If the US has any interest at all in reshoring manufacturing and bringing back, blue collar employment, labor, dollar is very too strong. Very, very, very too strong. Like literally, zoom out to like the 6 month chart. The dollar's the strongest it's been since 2002. 2002 wasn't a good time. 2000, 2002. A whole lot of hot air coming out of the market. Very different time with regard to regulatory facilities and capacity to suppress volatility. Yeah, okay. They want to test that shit? Do they want to test whether they have a capacity to prevent the system from collapsing in on itself? Probably not. So we'll see what they come up with. But we're in policy territory, ladies and gentlemen, where we get to see what the administration wants to do, and are they going to actually do policy that allows that to occur? You ain't doing shit with a strong dollar. And I mean, the U.S. has a strong history with regard to tariffs and instead of income taxation. But damn, we are not in a position to solely rely on tariffs. The amount of tax burden, the only thing that could finance our deficit spending and interest expense is the stock market. That's it. There's nothing else. It's not like you're going to get a productivity miracle where you're going to be able to tax blue collar workers. You're not going to raise income tax, especially this administration. And everyone's already extremely under pressure from a taxation standpoint in the context of the United States. Clearly, you got higher taxes elsewhere in the world, but in the context of the United States, we strongly not wanting to go more towards socialist um, policy. You already have a tremendous amount of socialist policy. I mean, Medicare, Medicaid, Social Security. Oh my God, the subsidies. Oh my God, the socialist policies in the United States are extraordinary, and they are huge, and they are expensive. The only thing that's going to pay for that is the stock market because of there's a well-known relationship between if you keep hiking taxes, your population is going to revolt against that hike. They're not going to be happy. Low to middle income earners are under extraordinary pressure. They have an uphill battle. It is, I don't know who the hell wants to be president in these conditions. It is it's ugly. It is really, really ugly. Hope that helps. Good evening, good morning, Cap. Much pleasure. Off topic, but biggest story this week, in my opinion, DeepSeek making training AI 10 to 100x cheaper. I think it could be more talked about if true, could accelerate everything, including material science, quantum. I think a lot of things. I am very much looking forward to ChatGPT's next version. I personally subscribe to ChatGPT Pro, which is on another level. It's on a whole nother level. Like their O1 Pro model. So the O1 model sometimes had a capacity to get lost, didn't remember the full context of the conversation, and you really had to have more isolated types of interactions. The Pro model is still gets lost in the much older parts of the conversation, but holy crap, it just is recursive to all awesomeness. It's quite impressive to say the least how it's able to interweave and just question, then question, and question itself. And it literally takes sometimes a couple minutes to formulate a response. Um, I could only imagine what the next version's going to be like. So I'm at a loss for words for what I've been experiencing with regard to AI. I would never have been able to do what I've done with regard to legal documentation without the help of AI, and it's just extraordinary. Um, what else can I say about that? Material sciences and quantum are a whole nother story. That's like post 2030 type conversation. What robotics is going to do. We're on the verge of the great deflation from a human resources standpoint. We're on the verge of infinite access to information. Literally, just with ChatGPT in its current form, you have infinite access to information, and literally can have full-fledged rational conversations with software. It's already changing everything. Anywho, I'm most looking forward to AI untangling my taxes and helping me with efficiency. I think it has a capacity to help with that significantly in its current form. And I can only imagine what the hell it's going to do in the future. Once again, no words other than if you're utilizing AI software, be it the paid version of Claude or the paid version of ChatGPT, and on the pro version of ChatGPT, what can I say? It's like talking to something with a degree of intelligence. It's not, AGI yet. I don't know. Would what it's above my point of the conversation, but there's a degree of intelligence in there, degree of significant intelligence where arguments are crafted meticulously. The responses are calculated. Hard to describe without experiencing it. If I had software skills, I would try to start an AI crypto tax accounting business. I think you're right. I think the accounting sector has an issue. I think how many sectors have an issue. I've said it in like, and I'll say it again. Goodbye all call centers. Is soon. You're not going to know whether you're talking to a human or not, and you don't need to. That's crazy. Get along robotics and manufacturing, so they want to repatriate supply chain. Who's going to do the work? It's got to be robots because if you can have $20,000 robots, there's literally no reason to hire a $60,000 worker. So it's hard to wrap your head around the way the system is going to change and how it's going to respond to those realities that aren't just hypothetical or speculative. It's just like when and not like when in the future, like fusion. It's like you got robots that walk like humans now. Give them 2 years and they're gonna you put a shell on them and you make them look. I don't know. I don't know. I don't know. But who's gonna stock shelves at Walmart and Home Depot and Target? Why would it be a person? Why? Because you can have the robot work overnight and it just goes back and charges itself. So that's that. And this is coming like, isn't that like we're on the precipice? That's probably the best way to describe it. It's like it exists right now. So it's just a matter of commercializing commercialization and deployment. It exists today. So lost for words. Raoul, hello, my friend. The con, anything on discount now? Yeah, there's a couple things on discount. I think Tango is undervalued. I have my eyes on Spectra, but I'm in much more of a preservation mode. I'm in much more of a macro is doesn't look good at all mode. And that is something to be respectful of. What a clip of Tango is it the day before yesterday? Small little addition. Um, that's about it. Not into these AI meme coins because the whole AI agent thing is a subsection of meme coins. Because yeah, other than codex, like mode and codex, that's a whole. That's kind of like what Frax is doing, but from an AI standpoint. So that's an interesting way to describe it. It's certainly uh, different. We don't know what these things are. Don't know what it is, but it's something that's certainly more than AI agents and meme coins. So there's something very interesting about what Mode and Codex are doing. Probably the most reasonable way to say it. But I'm not too interested in this whole exuberance around AI agents at all. And I'm not too interested about AI overlapping crypto. It's just, I think, in my mind at least, the monetary component trumps it all. It's way too early, in my opinion, um, to see opportunity. And then, like price speculation, from an AI crypto overlap standpoint, like we got to figure out what the hell AI is in meat space first. So for me, I still focus on what are the best dollars, and to me, that kind of means everything, especially that we're on the precipice of needing to significantly expand the global currency supply in order to, as Luke Gromen talks about, in order to finance these outstanding debt obligations nominally. That's that. And for me, that simplifies the equation. I could weed out the noise and focus on what counts and understand that great, if it goes up, it goes up. If it goes down, I can't control that. So I own what I own and it produces what it produces. So I've often described the two modes of behavior as prosperity and austerity. You're either making less money or you're making more money. And that's that. The price speculation is irrelevant in the context of a portfolio that owns things. So it's really the revenues, the receipts that matter most. And you either have more or less receipts. Therefore, you either have more or less optionality and choices to make with regard to reinvestment, with regard to administrative obligations or personal obligations. And that is probably the best way to describe it. Trevor mentioned, cheers, thanks for your input. Always, Trevor. We continue this conversation on Discord as always, and that's you know I think it's a never-ending conversation. It's supposed to be a never-ending conversation. Everything in law is just an argument and statute, and you're responding to written words. So written words have interpretation, have revenue rulings and whatnot, and ultimately those are just argument. So they're precedents, and that's the most important thing. And like common law, from a common law standpoint, what are the precedents? What has occurred previously? Are these circumstances different? Are these circumstances the same? And everyone has the right to present an argument and be responded to. So in that regard, I find law quite fascinating. I mean, that'd be very interesting. I'm 40-ish. 21. Maybe in the coming years, I get a law degree. I've thought about that lately. I think I find it quite interesting. Albeit, then again, there's the AI conversation. What's the point if you're going to be talking to autonomous agents that are trained in the entire history of all court precedents, of all court cases? What's the point of a human if you're talking to an intelligence that has access to that entire memory and that could have a rational conversation and has degrees of intelligence? So everything's changing. Everything. Last question on the board right now, but if you're on X or on YouTube, feel welcome to ask anything. Happy to talk about it. Checking in on how you feel about the software dev landscape. You feel empowered by AI. It will replace us. It's just destiny. Um, Empowered currently. Still can't do what I do. You either know, because you got to, because there's architecture. It's not like you're building something. You can't ask it to build something and then it's going to build it outside the scope of the architecture that you have currently in place. So it needs to have a holistic understanding of the current implementation. That's just the nature of coding. So it doesn't have a capacity to replace lead devs or devs that are just integral to the current implementation that understand how things are built and why they were built a certain way. Um, Certainly, entry level developers are likely not needed. I think the industry always was and it should have been much less entry level and much better paid and much more lead development. And you hire entry level accordingly to build lead developers, but projects don't need that many developers. That's the irony. Over my years in this industry, you only need like a couple of folks in an app. Uh, Obviously, if you have a massive app, maybe 2 to 4 people on an entire app. Just saying, that's just a real. You don't need 50 developers on an Android app. Oh dear God, nothing will get done. I mean, okay, if the primary developer has a very modularized architecture, yeah, but what's the point? Because the lead developer could crank it out in 90% less time. Boom, boom, boom. Especially with a modularized architecture, and everything is isolated, so you've completely minimized regression potential, and you've significantly increased the cadence of deployments. Um, so architecture is a big thing in software dev, and I don't think I'm not ready to listen to an AI with regard to architecture. Aside from I don't need it, it's overkill. It's like why when these architectures work great and you want to achieve modularization, decoupling, soft coupling, separation of concerns. Like you don't need an AI to do these things. Um, and it's not, that's the shortcoming of AI right now. It doesn't have the big picture. It just does not have that consciousness to be able to consider a large enough picture to be able to put together uh, things that we build currently. It's my 2 cents, but clearly the destination is your developers are AIs, and you're literally having conversations with them, agents. Crazy, right? Teo, hi Captain, I'm new here. Could you explain to me what XYZ is? How much does it cost? X. How much is it paying? Y. And how likely is it to continue paying into the future? Z. Simple as X, Y, Z. So this is a hard thing for smaller portfolios that have less capital. It's an easy thing conceptually to digest, meaning folks that are young want to make an income. So like, oh, I'm going to get a job, but no one teaches people explicitly that instead of a job to get income, you could buy income. So that's like scale and scope type thing. You could do other things other than a job to get income. So this is kind of like multiple streams of revenue type conversation or dividend investors type of conversation, and you're compounding your dividend stocks. Um, Obviously, it gets more complicated. What is a good investment versus a bad investment? And not many ways to buy income in equities that are reasonable because equities are basically boomer meme coins. So I'm just degrading equities there as compared to crypto because the potential for crypto is just enormous in comparison. 20, 30, 40, 50%, and multiple X's in appreciation over 4, 8, 12-year periods, but buying an income. So let's talk a number. If you buy $10,000 worth of something that's paying 20%, that's paying $2,000 per year in income. What is the likelihood that that will continue to pay that into the future? Frankly, in crypto, there's a high likelihood it will pay more into the future, especially for the protocols that have lendiness, protocols that have survived tumultuous times, especially 2022. These are not protocols, they're businesses, the five businesses we discuss. Now, $10,000 is an enormous amount of money for the vast majority of people. I cannot answer all questions like how do you acquire $10,000 now? Charlie Munger said it, your first $100,000 is the hardest to achieve. Once you achieve a certain amount of capital, things get easier. You get a capacity to make choices and decisions. It is much harder. Small amounts of capital are often left as required to engage with DCA, dollar cost averaging, and you're accumulating principal. You're accumulating what I would define as cash. And that's like DCA Bitcoin. The odds are for most portfolios, XYZ is not applicable until a critical threshold is met. What is a critical threshold? Critical threshold is a subjective definition, which means everyone needs to define it on their own. When do you abandon significant capital returns? Like, oh, I'm going after the meme coins, it's up 10,000% in a day. You abandon these large percentage gains, and capital gains. Oh, the taxation associated with personal capital gains. So, when do you abandon that methodology in favor of something which is relatively passive, the purchasing of income? You know, $500,000, as some dividend investor mentioned, buys you $1,300 a month in Coca-Cola. $500,000 in Curve at, let's say an average 20% between vote rentals and base cash flow from the CRV. That's what was 20% of a half a mil. That's $100,000 a year. So that kind of changes the equation. Like, why chase the multiples when you can make $100,000 of your income? And all right, it goes down. Austerity versus prosperity. The 100,000 becomes 80, 60, 50, and then it goes up 70, 90, 110, 150, and higher as this entire crypto space gets monetized. So the speculation is still there with regard to like overall expansion of the system, which is why we talk about dollars. And we talk about capital flows from underperformance to outperformance. So if the crypto market's outperforming and crypto market does what it does, gets into an exuberance and a frenzy, you get significant repricing. As that repricing occurs, money floods the system. As money floods the system, these businesses produce more revenue. And now that 100 grand that you bought is now 50, but it's going to 70, 90, 100, 200, a quarter mil. So instead of looking at the portfolio in terms of total net worth, which I think is a gross mistake, what's pertinent is the cash flow, the receipts, the income, the purchasing of income, the purchasing of a salary, so to speak. It's equivalent to owning a physical business. These are digital businesses. And the historic analogy was to a pizza shop, except the pizza shop has real estate, property taxes, employment taxes, employees and salaries, OPEX and CAPEX for goods and services required for that business to operate, power, water bills, meats, cheeses. That's just expensive. Well, it turns out credit, foreign exchange, derivatives, liquidity financing, and dollar liability. Those are your five businesses in these crypto markets. Businesses, real businesses, the big businesses, like the biggest businesses on the planet. There's a bank, like a real bank. It's not called Ave Bank, it's called Ave. Still a bank. Well, that's the biggest shortcoming that most have with the conversation about the crypto markets. These are banks. These are banking products. These are fintech products. That's real. You don't shouldn't need to have someone else say it's real for you to believe it's real. It's real. It just is what it is. I guess, a self-realization that you're like, oh crap. Clearly, meme coins aren't fintech products or banks. Whole different conversation there. And but everything else, this concept of DeFi, decentralized finance, which is very short-sighted in its definition, it's really crypto fintech. Fintech is a word that resonates in meat space. So fintech is what it is. These are banking products. These are digital fintech banking products. X, Y, and Z. Certainly not easy. I don't have any way to make it easy. All I know is the story to tell so that folks could attempt to understand the options and choices they have available to them, the decisions we should make to be responsible for ourselves and our family from a financial standpoint. It's like, don't go all in, don't spread too thin. Very simple, old statements that we've made. Like, be financially prudent, be financially reasonable. These are all, coincidentally, characteristics of a fiduciary. So, hope that helps. Soon, hope you're well, my friend. Good morning. What a concept. Preach, you really don't need huge team anymore. You don't. I was working for the last 2 years, and I rebuilt most of this product at the company I'm at. It was me and my partner. For the last couple months, she moved over to like iOS or to build an iOS product using Flutter. Very comparable to Android, so it's quite reasonable. It's written in the Dart language, aside from the UI component, which is very specifically Flutter. So it made sense. Leap from Android to Flutter is relatively straightforward. And I've been handling the Android product myself, and I do streams. Can handle it. One person handling an entire Android application. That's a very successful business. Don't need anyone else. I wouldn't mind my partner back. I wouldn't mind breaking up the work, and I don't really need more free time. I don't need additional work. I can handle it all myself. But once you get a product, really maybe one or two people tops to manage it. We're talking about feature sets. We're talking about the whole pipeline, whole product pipelines. What do you need? One or two people? That's the bottom line. Great definition about XYZ cap. Hope that helps. It's not easy. I'm sorry it's not easy. I wish this was easy. I wish more people could be prosperous. This is like a New Year's type of conversation. I wish many things. You know what? Honestly, I wish socialism worked. Isn't that an interesting? Isn't that real? A real statement? It doesn't work. It fails every time. I wish it worked. It's nice to think that people can work together. in a social way. But it doesn't, because humans are human. I wish things were better. I wish education was better. I wish quote unquote opportunity was better. What is opportunity? I guess that's very subjective. I wish people were happier. You know what I certainly wish? I wish people were more rational, because when you're rational, you can always engage in an argument, nonviolent argument. And I wish people were more rational. I think that's a big one. And that's my biggest fear. I fear folks that are not rational. That's really the root of all controversy and complexity and stuff that cannot be resolved easily or reasonably. It's lack of rationality. That's the biggest fear for me. Mateo, hope that helps, my friend. Yellow's high, high. Mateo. Hell, Timothy Cap, correct me if I'm wrong, but I believe I heard you say before that you don't hold, invest, in ETH. Is that true? If so, why? Just Ethereum DeFi. Well, that's the thing. It's all beta to Ethereum. Ethereum goes vertical. Everything goes vertical. Maybe it's just Bitcoin dominance. Bitcoin dominance breaks down and anything not Bitcoin goes vertical. I have no need for Ethereum exposure. So, from a conceptual standpoint, it's a cash instrument, pay bills with it, then it's volatile, just like a Bitcoin or whatever, Solana, anything. Anything in spot is a type of cash as I define it. So, clearly, folks get swept up in the total net worth type of mentality. Oh, I own X Bitcoin. I own X amount of Ethereum. Oh, Ethereum is probably going to appreciate more than Bitcoin. So why do I still own Bitcoin? Ethereum has been underappreciating compared to Bitcoin, as the Ethereum Bitcoin chart shows. That's a big breakdown. Well, this is very consistent with a fake out, breakout type of presentation, but it'll take some time to play out. Anyway, so total net worth is just unhealthy. Total net worth is unhealthy. What matters is your procedures. What matters is your rules, because that's the best you can do. Your measurement of success is best realized by adhering to your rules. This literally means write it down. Docs.google.com. Write it on paper if you have to. Pen or a pencil or crayon if you need to. So, rules. And then your success is adhering to rules. Use AI to come up with a list of rules, rational rules for what to do under what circumstance, for how to behave. You follow the rules. That's the measure of success. And that's my one of my biggest realizations over the years is not total net worth. Not drive you nuts because there's always someone with more money than you. You'll never win. There's no goal. It's like what Josh Brolin said in Wall Street, money never sleeps. Uh, Sheila Booth said, "What's your number?" And he said, "More." You need an end. You need a goal. You need a target. Without a goal, you're wandering without capacity to know how far you have made it towards your goal. So I highly encourage everyone to define their rules, written rules. Ask the question to ChatGPT, what kind of rules should I have with regard to capital management? I'm managing X amount of capital. I'm in crypto. I own this, this, and this. I want to start building a list of rules. And just write that, ask it. And that's a great conversation to have with AI. What should my rules be? And then you say, I want to be rational. All right, incorporate the overarching concept of rationality into my rules. I'm not too interested in total net worth. I'm more interested in cash flow if that's where you're at with the portfolio. Or I want to make sure that my portfolio composition is reasonable, that I'm not over invested or I'm not excessively diversified. What should my rules be? When do I sell something? When do I buy something? Got to have answers to these questions. Otherwise, it's like, oh, I don't know when to buy. I don't know when to sell. And you're just going to drive yourself nuts. And you're going to sit here and there's going to be an exuberance where prices are going crazy. And you're like, oh, you're panicking to buy. That's the last thing you want to ever do with capital. You never, ever, ever, ever want to be emotional, which is so incredibly difficult. And clearly why so many people have lost their entire investment capital in meme coins. And you see it all over the place. The vast majority lose. So that means it's a gambling to a degree, but you can skew the odds in your favor with a rigorous set of rules. So I hope that answers the question. I don't hold invest Ethereum because it's not part of my rules. I don't need to. I already have exposure to its beta, downstream financial activity, and I don't need it. I need it for gas. I got it for gas. Got to have gas. So certainly has a monetary property in the context of the Ethereum ecosystem. Certainly has the cash property. I define it as cash. It serves what Bitcoin serves as settle transactions. You can pay debit cards. So it works like that. But don't overexpose to a narrative is something I said a couple years ago. Like if you own it's like Curve ecosystem, there's like 20,000 downstream protocols. You can't own them all. You're too diversified. So how do you have exposure to all of them? That's the whole convex argument. Berkshire Hathaway of DeFi. It's the narrative. Great narrative. Don't want to own everything in the portfolio that Convex already owns. Stuff like that. And that leads to like the concept of exposure. How do you gain exposure to as much as possible with as little capital as possible? That's why Velodrome is such a big deal. It offers exposure to the entire optimistic superchain. That's wild. And Frax is like downstream exposure to everything that it wants to do from a biz dev standpoint. The Curve ecosystem, dollar liabilities between CRB/USD and DeFi.money. Potential exposure is large. Although, some are more speculative exposure, like DeFi.money is nascent, microscopic. But who's it built by? What's its mandate? What's its funding? Who's building it? That's where speculation comes in. Not easy answers, very complicated questions, Timothy. So thank you for the question. These are the types of questions we all need, folks. These are the types of questions that allow us to make better decisions and do a little bit better. 'Cause that's all you need. All you need to do is a little bit better than other folks. 'Cause most other people not only don't do better, most other people just royally fuck it up and make bad choices. So the better the rules you have, the better you make good choices. And just making some good choices will make a difference. Blue Demon could tangle looking juicy right now and tempting pullback for Velodrome, even though the discounted price is well on. See where we're at. Spectrum with the 20. Man, it's so volatile. They got emissions. That's VE, guys. This is VE. Folks got to really understand that. And Velo, 18 cents. I mean, discount is 7 cents. What's 4 to 7 cents is a wild number. Those are discounts. And here's your levels. Interesting that we're above this bottom level here. That's nice to see. Levels are critical to understand where you are in a historical context. Look at Tango. I mean, Tango's just pace cat 5.9. All right. So this level is critical. Uh, Happy holiday would be if this damn level holds. I'm not too interested in seeing this level not hold. I'm not too interested in revisiting 4 cents. Probably 25% dip from here. Not interested in that. I'd be very discontent. And we'll see. We'll see what happens with the price action. But this is a support level. Always remember that support is a position of weakness. Support is a defensive position, albeit especially from a declining standpoint. I mean, for instance, if it held up here, a support flipped resistance, or resistance flipped support, rather, that's a relative position of potential strength. But you need capital inflows to support continued appreciation. So what I always like to look for is the breakout, the retest, and the higher high. And that gives me comfort. This isn't with buying or selling. This is what gives me comfort. If it fell down and broke out, that would have been so much prettier, right? So here's a previous resistance. It broke to the upside, retested that resistance, and then pushed to a higher high, like above this high. So that's called trifecta of bullish confluence. And that's just something that affords comfort. This is an undesirable position. Now, bear in mind, all right, let's discount the price. Undesirable position versus favorable. Sometimes buying at the undesirable position is the most favorable from an opportunity standpoint. Max risk, max reward type conversation. I don't know. I don't have answers to this. Only risk. I have no idea where the hell the price is going to go, and all I know is crypto space is notorious for weakness, and total net worth obsession and lack of rational actors. Um, I think ironically, there's more rational actors in equity markets. I mean, not unlike the Magnificent Seven. Damn, even they can't even talk about equities because their value landscape has been decimated. So where's the rationality there? I think the humanity is falling into the black hole of irrationality. Very, very unfortunate. But is that not obvious? So the least we could do is be a little bit more rational than other people, if not for our financial well-being, for our psychological well-being. Worth it to try and be rational. It means something. Maybe for me, like rationality is like a spiritual concept. Like, what's the point of life? To be rational, because that means you're playing the game well and you're making good choices. 'Cause I surely look at life as a video game with points. We even have a point system. They call them dollars. It's literally a video game with points. And you got your level ups, you get your commendations, you got a resume and shit. Get your bonuses and your raises, and you got, you know, achievement unlocked type shit. It's literally a video game. It really is. Anyhow, Timothy, helpful. Thanks. Spent a few hours this past weekend learning how to use Curve. Confusing. For now, I just own the tokens. Owning things is meaningful. Owning things start. I often say to my young cousins, own more assets and buy them as cheap as possible. I think that that is always a reasonable statement. I always think long and hard before I say anything to younger persons. And that is a very generic, reasonable statement because most people don't own anything. So I encourage my younger cousins to own things. At what price? At the cheapest price possible. And then next week, buy more. Next week, buy more. Dollar cost average. Never spend all your money. You need cash to make choices, to pay bills, to live. So you have to have a proper portfolio composition. Whether you never historically thought of your bank account as a portfolio component, it is. It's a cash position. But what do we own? What do we own? What do we own must be one of the most meaningful concepts for humanity. Because what are we? But what we own is like the ultimate extension of a person. What do you own? Do you own shit? Do you own dolls and figurines and toys, or you own something that has meaning? A home to protect your family, a home to keep you safe from weather, a car for transportation. It's meaningful. Doesn't make much sense to own an expensive car. That's just vanity. And a home, clearly a large home is vanity also. But what do we own truly defines us, fortunately or unfortunately. Because if you own an expensive car, an expensive house, it expresses vanity. If you own jewelry, it expresses vanity. So you can tell a lot from a person by what they own. And what you own should tell a story. And you need to be able to tell a story about why you own what you own. And historically, we've called that dinner table investing. You need to be able to be prepared to sit down at the dinner table with old people, your family, grandparents. Tell them, what are you doing? And my wife always says, know your audience. Be able to tell a story about what you're doing and be like, okay, cool. Oh, I'm so proud of you, young son. I'm so proud of you, my grandson. 'Cause that's what's meaningful in life. Storytelling, which is kind of what I do here. All right, fine. It's exactly what I do here. I like telling stories. It matters to me. And I hope it helps folks. Let's hit that like button. Thank you, Rick. Thank you. Mix. I really could use a rational Uncle Cap. No, none of them listen to me. None of them listen to me. One of the older cousins, is a cousin-in-law, listens to me. None of the younger ones listen at all. 18 and younger, nothing. Off the radar. Don't listen at all. Meanwhile, I'll tell an 18-year-old that if you just graduate high school and get a job at Best Buy making 50 grand a year, stay at home, invest 40 grand of it, and live out of the fridge, and you have 10 grand, which you can do whatever you want to do with. And you take the 40 grand and you invest it year after year after year, your CAGR's through the roof. Your compound average growth rate is through the roof. And if allocated to the markets intelligently, 40 grand a year, you're going to be just fine. And a CAGR of like, eh, pick your CAGR, compound average growth rate. And your first year, your CAGR is 100%. I mean, your CAGR is going to be insane if you just invested a standard job. Between 18 and 30, you'll have millions of dollars by the time you're 30. And that's just off of graduating high school and just doing a standard job. The problem is understanding this. And the only way you can understand this from hindsight, no one could possibly, no one's going to do that. But that's the math. I mean, just run the CAGR on 40 grand a year, compounding at a CAGR of, let's say, just 30%. And that's not probably what you can experience in crypto. I bump it up to like 50 for the fun of it. Just search for a CAGR calculator. Be like 40 grand a year invested every year between 18 and 30, and then do it for a CAGR of 30% and a CAGR of 50%. Kids today, that's kids. It's always kids. It's always kids. It's always until they realize that, fuck, I'm screwed. And then you try and think differently. Listen, no joke. I didn't even start thinking like this until I was late 30s. I was late. I'm trying to tell younger cousins how to do better. Shame on me. Shame on me. I know as hell. I sure as hell know what I did in my 20s and early 30s. Well, my 30s. My 30s were filled with just job to job to job to job, software engineering. Ended up doing a bunch of contracting post like 2018, 2017, give or take. So, because I was stuck in that paradigm that work is how you made money instead of now knowing that you could buy the salary instead. Ladies and gentlemen of the crypto space, Monday, December 30th at 1:36 p.m. We are a day before New Year's Eve. I wish you all the best. Be safe with friends and family. Talk about rational things. Stay calm and collected in the most precarious of times. It's the only way that makes sense. Only the cool head prevails when shit gets real. So rationality trumps all is the most important thing. Come up with some rules over the holidays. Talk to AI. I mean, literally, it's free, and then you pay for premium. So talk to AI. I mean, start. If you haven't talked to ChatGPT, you have to talk to it. It means a lot. The world is changing, and change with it. I wish you all a good one. I won't see you until the first is Wednesday, so it's New Year's Day. The odds are we're not going to do a stream, so I won't see you till later this week. I wish you all the best. 165 people made it to the end of the stream. I appreciate each and every one of you, and together we are all a little bit more rational because of it. And I will see you again next time. Until then.